Terrific. Thank you very much for the quick intro there. And to the interest of time, this is an exciting event. You've got lots of speakers, and this should not disappoint. And we're going to dive right on into things. So to get started, guys, of course, standard disclaimer, this is for educational purposes only, not a recommendation to buy or sell any securities discussed. Acorn Wealth and Smart Money Trading are not registered financial advisors in any jurisdictional province. Always be aware of the risks of trading before taking any action. Past returns discussed do not guarantee future results. There's no guarantees in any investment, not stocks, not real estate, just death and taxes, as they say. And of course, any positions discussed, however, may be being stocks that myself, Acorn Wealth, or the employers and contractors of Acorn Wealth hold, or positions we may be looking to get into. Okay, so with that out of the way, let's dive right on into the theme of the market, and it couldn't be more timely. Right now, the stock market, as I'm sure you've noticed, has been experiencing a pretty volatile time. That pretty much goes without saying for the entire year of 2025 so far. You know, one day it's surging, the next day it's plunging, and it can be enough to make even experienced traders nervous. But what today is all about is for those who understand the right patterns, the right signals. You know, this volatility isn't chaos, it is opportunity. And that's what today is all about. In fact, you know, market turbulence can become your greatest advantage. So this all hinges on being able to transform wild market swings into profits. So that is what today is all about. And if that's why you're here today, pop a 23 in the chat box. That's what we're going to break through. Many of you may have seen us around. We've been around for a while, almost 20 years. I started Acorn back in November of 2007, right before the global financial crisis. That was trial by fire. Luckily, that was one that we were able to anticipate. But we've worked with over 7,000 students now worldwide, working through what I'm going to show you here, and we were awarded the Best Stock Market Educator of the Year by FinTech Awards in 2022. I mean, I'm not going to sit here and chest beat because A, we don't have time for it, and B, that's not my style. But what I do want to start out today with, as we bring up the live market in just 1 second, before we go into the data I want to show you, I want to check in with everybody in the room. You know, you've heard a number of speakers today. I'm sure you've been watching the market. What is your strategy, or what do you think? What do you feel the market's going to do next? Type it in the chat box. What's everyone think? Are we going to boom? Are we from here? Are we going to bust? Or not sure? Type it into the Q&A. All right, William, boom. Maya, boom. Boom with some hiccups. Boom. Oh, all booms so far. All right. Well, don't let the group mentality, you know, affect you. If you think it's going to bust, feel free to type it in. Retracement, one more week, then further up. Patricia, I'm in line with you, I think. Well, you notice the way I posed that question was, what does your strategy say? Really, we need to avoid what do you think is going to happen, what do you feel is going to happen is something we absolutely should avoid. What we really need to be asking is, what do our rules tell us, right? So let's take a look at a quick foray into peeling back the onion layers. Is that okay, guys? I'm just going to take a few minutes of time to talk about the current markets. If that's all right, pop a 1 in the chat box, and then we're going to go into how we trade it. But the first thing that, you know, what we've been doing for the last almost 20 years is we've been specializing, we are specialists in patterns and smart money. So we need to get away from the headlines, first and foremost, the news or the noise, which is essentially just leading us around by the nose. And what we need to look at is what the data is telling us. What you know, follow the smart money, follow the money. And so if I'm looking at a scenario in the S&P where the news headlines are reading market at all-time record highs. Okay, so here's a screenshot of the S&P from yesterday. We'll look at today as well. But here's the S&P from yesterday. What's the news saying? Market at all-time record highs. Da 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 da. Well, if we determine the market, this so-called market, to be the S&P 500, well, let's challenge that theory just a little bit, shall we? The S&P isn't the market. In fact, it's a very distorted view of what the market is, right? Because the S&P is weighted. The majority of the value of the S&P 500, as it's traditionally discussed as, is weighted to the top 8 companies in the S&P. You know, Amazon, Google, etc. The Magnificent 8. So they account for the majority of that recent move we've seen to all-time record highs. But the real stock market is not at all-time record highs at all. In fact, there's a way that we can look at that very easily. Does anyone know what it is? Type it into the chat box if you know what I would argue is a far better way to look at what the market's really doing. Anyone know? Maybe a few ways, but the answer I was looking for here was RSP. Now, RSP, Romeo Sierra Papa, who's never seen this before? Pop a 2 in the chat box if this is new to you, just so I know how much time to spend on this, because it's really valuable. All right, lots of news. Wonderful. That means we're learning today. That's my job, right? Okay, so RSP, what this does is it takes the entire S&P 500 and it equally weights them. You know, think back to the old Animal Farm book by George Orwell. You know, it's all animals are equal, but some animals are more equal than others. Anyone remember that quote? That's what we're looking at in the S&P, right? It's distorted. In RSP, all stocks in the index are considered to have an equal contribution of the index's value. And what do you notice if we look at the S&P 500 as a true equally weighted index? What's the market really doing? Are we at all-time highs, or are the 500 stocks that make up the S&P 500 actually not even at new highs at all? So what RSP showed us going into yesterday is that we've actually, here it was from yesterday, sorry, is that we haven't broken all-time highs. In fact, where we ended up last week, at the end of last week, was exactly at the test of the double top. So if you weren't looking at this data, you would have been thinking, okay, the market's broken to new highs, where do we go from here? Which is a completely different scenario compared to we are at all-time resistance, testing it right now. Those are two completely different questions. And so as we went into the end of last week, this is what we shared with our members in Trading Room last week, saying, look, this is a high risk period. We are at all-time record highs, and this is where we sell into a rally and wait for it to break out, or at least update stop losses, protect profits, take partial profits, go defensive. Now, the other interesting thing to look at when you compare what happened yesterday to from the S&P, right? If you look at the S&P 500 was down 0.7% or so yesterday, breaking the 9-day moving average, you know, instilling fear and worse, causing traders to react emotionally. But instead, if we actually look at RSP was actually up 0.5% yesterday, held its moving average, held support, held bullish. So we need to peel back those onion layers, don't we? All right? Now, let's go one layer deeper. If we take a look at RSP, I'm a massive patterns guy. So if those of you who joined us back in our May events, we talked about this at length about why we were very bullish on the market, and we expected the market to rally from there. This is where we were hosting those events. We expected it to rally to this double top, and we've been very long throughout this period. Recently, we identified that a rising ascending triangle had formed, which gave us a target of exactly that double top, which made that analysis even more likely and confirmed in the bullish direction. So what is the pattern now? Well, what does the pattern right now suggest? The pattern right now suggests a downward channel. That's currently what we've got as far as our analysis goes. So what are the rules of a downward channel? Well, the rules of a downward channel is that you will typically have 1, 2, 3 touches along resistance, and then breakout. And then it should break out roughly to around 194 to 195. If and when that occurs, that now pushes the real market into all-time record highs. Now we're dealing with, a fresh bullish leg. But what we've got to overcome first is we've got to overcome this level. So this is what trading to me is all about. It's about having a plan, having defined if, when, but, right? If this happens, do this. If this happens, do that. Trading is about rules. I mean, 85% of the volume in the market, roughly, JP Morgan estimates anyway, comes from algorithms, algorithmic trading. It's got nothing to do with you and me. So if 80%, 90% of the market is coming from rule-based algorithmic trading, then shouldn't we be also taking a rule-based approach? Now, if you therefore look at what's happened in the market today, what did the S&P 500 do? It plunged further, breaking through the 20-day moving average, only to reverse and close right at the top of the range strongly. Now, again, the emotional response could have been selling at the bottom of today's range, maybe even going short at the bottom of today's range. And I would argue that's, in some cases, maybe the right move on individual stocks. But on the index, I wouldn't be so sure, right? And if you take a look at what RSP did today, it actually didn't break even its 9-day moving average at all. It held this support zone, tapped on the resistance above one more time, and in fact, looks far more bullish than its S&P weighted counterpart. Would everyone agree so far? What is everyone thinking so far? Is this making sense? I hope I'm not getting too technical and diving too much into the deep end, but give me a 1 if it makes no sense at all, and a 10 if it makes perfect sense and you're loving it, or somewhere in between, 1 to 10, just so I know where everyone's knowledge and how. 11, wonderful. Okay. Okay. So why don't we go one layer deeper, right? I love peeling back the onion layers. Why don't we go one layer deeper? I mentioned smart money. Well, what's the smart money doing? What are the insiders that run these corporations doing with their own money? Because that is the most important fundamental evaluation that one can get, right? Well, the insiders are buying again. If we actually look at the insider buying to selling ratio, which is represented in this green bar, that tells us how many insiders are selling versus buying, or sorry, rather the other way around, buying versus selling. The black line across the chart is the average. So if we're in bullish conditions where insiders are loading up, putting their own cold hard cash into their own companies, that's what we want to see, right? That's the best fundamental research you can do, and you can do it in a blink. So in the S&P, as of today, are buyers in control or sellers in control? Buyers are in control. It's above average buying versus selling. And in fact, that's only been the case 1, 2, 3, 4, 5 months of the last 12, and August is one of them. So that gives us some extra probability. Nothing's guaranteed, right? But what we're looking for in trading is probability. We're trying to tick as many boxes that we can of things that we can control. And what we can control is probability, the quality of a trade, and whether it's good enough to take it, and how much risk we're willing to take. All of these things we can control. So if I'm going to go long or hold long with the market at a critical resistance point, seeing that insiders are buying into this level is encouraging. It gives extra probability. But again, peeling back the onion layers even further, does that mean we just go and buy the S&P? No, it doesn't, because also as we drill down deeper, it's not just the S&P. It's not a stock market. It's a market of individual stocks, and those stocks are broken up into sectors. So if we want the best trades, if we want to give ourselves the best edge and advantage, well, why don't we look for the best stocks in the best sectors? So where are the insiders buying the most? Well, technology is one area where insiders have accelerated strongly, as compared to, say, consumer defensive, where sellers are still in control. So what would you prefer to be buying? Would you prefer to be buying a sector where insiders are loading up, or would you prefer to be buying a sector where overall insiders are selling? Simple question, and I think the answer should be fairly simple too. It can be, right? I would have more confidence in a sector where insiders are loading up versus confidence in a sector where insiders are dumping. Would that be fair to say, everybody? Put a 23 in the chat box if you'd agree with that, if you'd share that opinion, right? Then you got consumer cyclicals, which are mediocre, but still slightly to the buy side. You got healthcare, strongly to the buy side. All right, so we got tech, we got healthcare, communication services, edging upwards, it's okay, let it sit. Basic materials, just breaking out. Okay, so we got technology, healthcare at the top, basic materials and communication on a watch. What else? Real estate, boom. Real estate, strongly to the buy side. Okay, we've got technology, healthcare, real estate as three top sectors. Energy, lagging, pass. Financials, slightly above. Okay, technology, healthcare, real estate, financials. All right, so out of 11 sectors, I've just highlighted a few of them. Utilities is in the sell territory as well. Like, we don't have to go through them all. This is something, by the way, that we do every week in our trading room to prepare people for the week ahead and go through this kind of market checklist, which I'm giving you a bit of a sample of today. But right there and then, we've now just narrowed down 11 sectors to 4 that are strongest from an insider's perspective, right? So right now, we've already increased, arguably, that potential for profitability or probability. In the same way that back in May, I said to everybody who was there in that live session, and as well as the ones we did in April and March, that the best longs to be had were not buying the S&P type stocks, the ones that were already arguably overbought. But in fact, the stocks that were playing catch up, stocks in the Russell and things like that, that were still way, and still are, the Russell 2000 still way below its all-time highs. And so back in March, April, May, I talked about preferencing Russell 2000 stocks. Now, what's happened since then, for those of you that may have joined back then? What's happened? We've seen stocks like AEVA, Avis, Carvana, Nvidia. If you look at the stocks like AEVA from the Russell, Wall Street Journal reported back in July that these stocks have significantly outperformed the market. And what tickled me pink when I saw that article in the Wall Street Journal back in July is the fact that AEVA, the #1 stock they highlighted, was one of our top alerts that we had talked about ad nauseum back in March, April to our members. Maybe even some of you here remember it. Put a 1 in the chat box if you took part in this trade. This is where we get to introduce the third piece to the puzzle here. You know, we've talked about going from the market to the real market to the sectors beneath it and what smart money is doing. And now we get to go from that to what is the best way to trade it. And this is where the smart surge pattern system comes into play. This is something that I've spent the better part of 20 years working on, and we only released this 2 years ago, but it's something that I started working on when Acorn began almost 20 years ago. I'll go into it, the history of it more in a moment, but just to start with this example, what you're seeing here on the chart in these green arrows is a smart surge system being detected by our algorithm. So this is something that works in wealth charts, TradingView, Metastock, TradeStation, Think or Swim, all the major platforms. So, and I'll go over how you can be involved in that in a moment. But what we're looking at here on AEVA is the weekly chart and the weekly smart surge system being detected 1 week, 2 weeks, 3 weeks, 4 weeks, 5 weeks in a row, from where it started at roughly $2 all the way up to roughly $6, $7, where it then launched again on the weekly. And went from $5, $6, $7 all the way up to 35 and change. Now, I mean, even if you didn't get it at the beginning of it, and even if you didn't hold it till the end, even if you just held it from 5 to 10, right? I think everyone would agree, even if you just got that part of the trade, that's 100%, right? I mean, there's a lot of meat on this bone that even a cautious trader could have still walked away with a meaningful chunk. And diving deeper into AEVA, you can see how that breaks down all the way back to the daily. And that's what made this one very special, is this wasn't just a YOLO stock. This wasn't just a hypey meme stock. This was a company that had some real stuff going on. It had massive insider buying going on behind the scenes, which gives me the indication of fundamental strength. And if you take a look at the daily chart, our algorithms detected that footprint, that smart money. And what happened here on the daily chart is a smart surge was detected almost from the very beginning, almost from the outset, right at $3 when the first smart surge was alerted. 1, 2, 3, 4, 5 days in a row. So if you missed it one day, it was there the next and the next and the next and the next. And then after that rally from 3 to 7, basically doubling, it took its pause, broke out again. And here you go and ask yourself the question of, gosh, it's already up 100%. Have I missed it? Is this the top of the move? And you know, we're all taught that in our trading. You know, 95% of the time it would be true. Don't chase. It's already up 100%. Forget it. Move on to a new one. But that's very different in the case of a smart surge. In a smart surge, it could be about to go up another 100% and maybe even another after that. And so when the smart surge was alerted once more as it broke through 7, this was actually a new entry signal we published to our members, and of course went from 7 to 20 from there. So again, this was made extra or amplified in its power because it wasn't just a daily signal; it was also a smart surge on the weekly as well. And so this is the pattern. This is a pattern this is a system that has been designed specifically for volatile or what some people would call uncertain markets, or sideways markets, where a lot of other patterns and strategies fail or falter. This is where the smart surge thrives. So what exactly is the smart surge? Well, the smart surge, in simple terms, is when it starts with when a stock makes a powerful move, a surge in price, coupled with unusually high volume and clear smart money and momentum signals behind it. So this is like the stock yelling, pay attention, because something big is accumulating behind the scenes. And so what you'll usually see is an initial very sharp price move, and this could be up or down because it works for both longs and shorts. And then a brief pause or consolidation, kind of like the stock catching its breath, and then another strong move in the same direction. That's the second wave, and that's the trade we take. That's our entry point. That's the moment we say, all right, the odds are now in our favor for a sustained run. So think of it as a 1-2 punch. The first surge gets it on your radar. The second surge, with all the smart money behind it, confirms the entry. And then when you get that confirmation, you've got a high probability setup on your hands. Now, this is why it is such a rare setup, because this is not something that happens very often. Out of the 8,000 stocks roughly that are scanned every day, take a guess at how many smart surges are detected. How many stocks are good enough to qualify for this smart surge algorithm? About 5. 5 out of 8,000 are good enough quality to cut the cheese. And this is why for the first 17 years of understanding the strategy, I didn't really trade it. We didn't even teach it. The reason being because it was too hard to find. So it wasn't efficient. So loved the profitability, loved the probability, but didn't love the fact it took 9 hours to maybe find one, because you're literally trying to find needles in the haystack. 5 out of 8,000, that's less than 1%. That's very difficult to do manually. And it's only been with the advancements in technology in the last few years that we've been able to build this mousetrap, to build this system that finds exactly what we're looking for over and over. And to give you an example of exactly what this looks like over and over, TDUP was another great one, especially given the context of it. And I'll go to that in a second. But TDUP is on the more speculative side of the market. And by the way, it doesn't just work on these stocks. We did it on AMD, Seagate, all these more recognizable names. I've got a high level of confidence in this though, so I don't mind some of the lower stocks if the smart surge has been detected. And in TDUP, this was a great example of that. This went from 50 cents to $1, up 100%. Now that's not the trade. The trade is the second surge. So after that surge is detected in 1, 2, 3, 4, 5 days in a row, it's alerted. Then it takes its pause, and there's the entry on the breakout of $1. Not only was it alerted on the daily, but it was also alerted on the weekly. Now this is that 1-2 punch where multiple timeframes confirm the system. And so this is a phenomenal example, because with that unified multiple timeframe confirmation, this ended up surging all the way to around $9. That was a 600% move from the most recent alert we shared with our members. And that was amplified even further by the fact that behind the scenes, insiders were buying hundreds of thousands of dollars at 90 cents and below. So if you think about that, Noam Poransky, for example, just to give that one example, bought 72 grand at 80 cents, bought another 150 grand at 81 cents, bought another 100 grand at 83 cents. All right, so what have we got? 350,000 bucks, maybe just slightly less, at 80 cents, which at $8 would be worth 3.5 million, just under. And good for him or her, right? This information is publicly reported, and this sleeping giant, this diamond in the rough, was ready to explode. And so instead of looking at that in hindsight and going, gosh, wouldn't that have been nice? We're able to detect this. And this is what the scan's specifically looking for. But perhaps more impressively, if you take a look at one piece of that move, the chunk between the beginning of 2025 through to June, that chunk, that part of the move was 400 and something percent, 401% roughly. The reason I highlight that piece is because just think about what the market was doing at the same exact time. While TDUP went up 400%, the market dropped 20. So in an uncertain market, what do you want? Well, what I want are stocks that have are writing their own song. They're singing their own song. They're marching to the beat of their own drum. I want stocks with armor. I want stocks that I have confidence have a higher probability of being able to go up, even if the market does go down, to be able to withstand drawdowns and pullbacks in the indexes. And it comes back to this layered approach of looking behind the headlines and all the garbage out there and all the noise to what's really moving. CLNN is another great example just in the last few days. This was one of our top alerts that we shared in our trading room last week on Tuesday and again on Thursday. And CLNN is a healthcare stock, right? Top sector. And there you can see smart surge, smart surge, smart surge. That got us on our radar. And 2 weeks ago, we mentioned if it breaks that little channel here around $3.70, there's the entry point with a target of 550. That was hit today. That's a 50% rally over the last 3 days. And that's in a market that has been pulling back. But not all stocks pull back. And this is a great example of one that didn't, and one of the favorites of our alerts last week. So this is, depending on how much time we have, I will come back to show you some more examples. But this is the essence of it. And so I've never done a 40-minute speaking spot, so this is a record pace for me to go. So I hope I'm not skipping any of the key details, but we've covered a lot given the time so far. And so we put together a really special offer to give everyone the opportunity to be part of this. It's groundbreaking stuff, and it makes up, I'd probably say at least 85 to 90% of the positions I'm in right now, long and short, are all smart surges. So that says something. So with the smart surge offer that we're doing today, this is including all of the things that you need to be successful with this right out of the gate. First and foremost, we're giving you lifetime access to the smart surge scanner. Now, this is a product that typically you have to subscribe to. So this is normally $997 a year, and that would get you access to the scanner and indicator. In today's special Festival of Traders event, you're going to get lifetime access, which means there's no ongoing fees, no annual fees, nothing at all. That is all included, and it's all included for life. On wealth charts, TradingView, Thinkorswim, Metastock, Incredible Charts, TradeStation, trading indicators, you name it. Okay. Now, second, Smart Surge Indicator. Of course, that's going to be included for you as well. And so every single time that a Smart Surge qualifies, it's going to show it to you on the chart, whether it's on the daily or the weekly or the hourly, because yes, it works on multiple time frames. You're going to see it right there on the chart that a Smart Surge has been detected. That is also lifetime access. Now, if you use multiple platforms, like maybe you trade with Thinkorswim and chart with Wealth Charts or TradingView, no problem. One of the benefits of the lifetime offer is you have a multi-license setup, so you can install it on more than one program as long as you are the operator, versus typically you'd have to pay for an extra license fee under the subscription model. So you're not just saving every year by having that lifetime access, you're also getting the ability to install it on multiple platforms, or if you change platforms in the future. And the other thing that we're including as a bonus is the Finding Flags course. Now, this is one of the types of surges that can happen, but there's an old saying of go broke on breakouts. There's a lot of fake outs and stuff and noise in the market, and this is a phenomenal course for anyone that wants to learn the why behind the what. Whether you're newer to trading or you're a veteran trader that loves the way we do it, this is a 4-module course you can do in your own time. You can do it now, you can do it a month from now, you can do it 6 months from now, whenever you've got the time to do it. It's not required to get started with the Smart Surge strategy, but it is a phenomenal course if you want to learn more about the power behind charting these patterns correctly. So all of that is included in the package, along with 3 months access to your own personal one-on-one coach to help you, guide you, practice with you, absolutely everything. So that's all included. The value, easily $5,000 if you were to go and buy those things individually. For those of you who've seen the recent offers we did throughout last month, you'll know that we did a promotion here for all of this, for any new members, for only $14.97, and that was still well worth its value. But what we've done for the Festival of Traders and this special August event, we're giving you access to all of this and lifetime access, not for $14.97, not $5,000, but you'll get all of this for only $397. Now, on top of that, to make this even sweeter, is if you get signed up now in the live event and using the link below, acornwealthcorp.com/traders, and you get set up here during the live event, we'll close that off at the end of the hour in 20 minutes time. You'll also gain access to 3 months of our trading room, our live trading room every Tuesday, Thursday, and also 3 months access to our trade alerts. And we send out a trade alert every single week, a video with 5 of our favorite setups, entry points, exit points, insiders, absolutely everything, breaking or options we're taking, setups like AMD, where we alerted that at $140, took the options in it, and that was a beautiful trade, as well as actually taking, that's up 50% at the time of that screenshot, bought 30 grand worth of stock in it, that was up $2,600. These kinds of alerts, we do everything in detail, and that's another thing we include for 3 months for everyone getting started here today within the next 20 minutes. So the link is acornwealthcorp.com/traders, and that will get you started with absolutely everything. I do believe that is probably the end of my time, if I'm correct. So it's been a absolutely wonderful session. I've tried to give you a little bit of a glimpse of all the things that are in store for you, and this is just scraping the tip of the iceberg. So take advantage of that offer at traders, acornwealthcorp.com/traders, and can't wait to see you on the inside.